Good morning. Good morning. This is our People Matters show. Today we have a special guest, Michael Haltman. And Michael is a 30-year career veteran on the finance title industry in New York City in Long Island. I'm really, really happy to have him today. He is an MBA in finance. He used to be a bond trader. He used to own a commercial lending company. He's an owner and CEO of Halmar Abstract Service, which, by the way, at one point you were named or ranked number one title company in Long Island, which makes me really excited because I have a property there as well. And and a chair of the board of the Combat Veteran, who they have a program called Heroes for Heroes that we'll talk a little bit about it. Really excited to have you, Mike.
I'm thrilled to be here, Miguel. Thank you for having me on.
Well, first of all, let's start with your career. Very interesting about your career because your background is finance, and obviously you jumped to, I mean, from bond trader to commercial. Tell us about a little bit just to start about what motivated you to go into commercial lending and then jump into the title company. What was the story behind it?
So, I was a bond trader, I was a bond analyst, I was an equity trader, and then, after a little while, you burn out a little bit. And I had the opportunity to start a commercial mortgage company. At the time I did it in the early 2000s, the market was extremely vibrant. It was a great market, and I partnered up with a guy who knew underwriting fantastically. I would get the business, he would underwrite the business, and it was great. It was going very well, and our focus was on the small balance loans, which are not the A paper necessarily, but more like the B and C, deals with hair on them, deals with a story, deals where you had to go potentially to alternative types of lenders, not necessarily Citibank. And everything was great and going well. And then 2008 hit, and that was like a bomb on the market. I was selling paper to the CMBS market, and that kind of went away in 2008. The company went from viable to unviable really over a weekend. The weekend
Right.
when they decided that Lehman was going to fail.
Yeah.
And my wife is or was in a hard money residential construction lending company. I don't know if you're familiar with that, but you may be. So they lent money to builders. They were securitized by the land. It was high interest, but for people who got in and out quickly, it was cheaper than going to a lender and paying 12 and 2 points. In any event, in 2008, it was a family business. My father-in-law used to say the only thing that could hurt this business is if an atomic bomb went off on Long Island. You know what? 2008 in the financial world was kind of like an atomic bomb going off on Long Island. They went out of business. We lost most of our money, and we had two girls in college. My son was going on his way to college. Longer story about, but it's a story about reinvention and really not curling up into a ball and facing your issues and really fighting. I always like to quote the amygdala. Yeah, I don't know if you're familiar with that, but it's the part of the brain that is the fight or flight mechanism. A lot of people run from issues. Here we really didn't have an option, and we both knew about title insurance. We had the opportunity. It was a time when a lot of companies were going out of the business, and as a trader, I always, the adage is you want to buy when no one wants them and sell when people can't get enough. So the title insurance business was a great option. We started the company in 2008. Not the easiest time in the world to start a title insurance company, but you know what? We've thrived, we've grown, and now we are strong.
That's awesome. Great story. So you how old were you when you started the title company? The fact that you basically lost everything and got creative and started with your wife a new business. At what age would that happen?
Well, let's see. 2008, I'm 65 now. So about 17 years ago, I was
In
50.
your 40s.
Oh, yeah, late 40s, 50.
So this is a good message because you are in your 40s, you lost everything, and a lot of people did, but not a lot of people came back and built something like yourself. So, what was the motivation behind it, and what would you tell people? Why you made it happen, and some other people didn't? What's the difference between you and some other people that just
I mean, I think it comes down to that you can be. I always say you want to be in a foxhole with people who think like you, and there are a lot of people who you do not want to be in a foxhole with. And what may listen, necessity is the mother of invention. You have some options. Your option is to do nothing. My father always used to say there's two kinds of decisions: omission and commission. And omission is just laying back and taking what's given you. We tried a lot of different things in 2008, and title insurance worked, but you have to have an internal fire. You have to have a mentality of never give up, and you have to really hopefully have team members who think very much the same. So that's, I don't know if that tells.
so I never heard about omission and commission. That's like
You
I
need one,
learned
right?
something today.
Yeah, my
That's
father
a
used
good
to
one.
tell me that all the time.
So you build a team around you, and this is about people, and this is something that we want to encourage people to learn from stories like yours. Now, you surrounded yourself by people, by some other people, talent that you surround yourself. What is it that makes? How do you have you learned to pick the right people to surround yourself with?
You know what? I mean, that's a good one. That's a good question. My middle daughter is a IT recruiter, and she has to judge talent. And how do you judge talent? You talk to people, you look for authenticity, you look for someone who speaks as if they know what it is that you need and actually do know what they need. I mean, a lot of it is just an inner gut. I'd like to think that I've always been a fairly good judge of character. So, when you're sitting in front of somebody face to face, you get a feel for who they are, where they've been, and what they're prepared to do.
Okay.
Yeah.
So let's jump a little bit. Let's switch gears, and I want to talk about your business. New York City, Long Island, the state of New York is a unique state in a lot of ways. But one of our, when we talk about people and we talk about scams, what would you say is the number one scam that you see out there today? Not 20 years ago, but today you still see it happening in your area.
I would say number one is bank fraud.
Bank
That's
fraud.
huge. Where, well, I guess under the bigger umbrella of cyber fraud. So the scammers have gotten so good at duplicating the logo, the basically I think they steal an email that a bank sent requesting or providing the data for sending a
Hmm.
wire. And the biggest fraud is they convince people to change it to oh, you know what? We need to change the account number, or we need to, it's prevalent, it's huge, and it's costing the industry a lot of money.
Right. Now, in your field, in the title side specifically, with people, most people, I would say, they're not really knowledgeable about titles and about property titles.
Very
They
true.
don't understand really behind it what that really means. And in that regards, what is it that you've seen that some other companies and title companies are, how are they taking advantage of people sometimes?
Well, so I put together a list of 10 differentiating factors because a lot of people consider title insurance to be a commodity.
Right.
Whether you go to me or Joe Blow or whoever, you're going to get a you're going to get a title policy, and it's the same no matter who you use. Number one, they take advantage of people, and I'm not saying this is blanket across the industry, but we've seen too many examples to discuss of the title bill. So in New York, the title premium is going to be the same no matter what company you use. However, there are what's called ancillary and junk fees that are also on the title bill. You can put onto that title bill things that nobody ever heard of. So what? So our title bill, we keep it very clean and close to our cost. We don't put anything unnecessary on there. And, we've seen multiple title bills where the difference can be $500 to $1,500.
Well,
You know, and that's not insignificant. If you're buying a house in the Hamptons and it's a $3 million house, a $5 million house, if you're getting jammed by the title company, you're not really going to feel it. But,
right.
for the rank and file buyer where maybe they're struggling for closing costs,
Yeah.
maybe, 500 to 1500, why shouldn't that be in their pocket instead of the pocket of a title insurance company?
Right.
Is our feeling. So, what we always tell people is always get a second opinion. So somebody gives you a title bill. Actually, a guy called me this morning. He's buying property. He thinks the charges look high. And I said, give me the purchase price, give me the mortgage amount, and I'll send you our title bill. And even if you don't use us,
Is
go
there
back.
is there a Michael? Is there a formula that you would suggest to most people out there to say multiply this times your loan amount, and this is going to give you an idea what to pay? Is there a factor that people can learn?
You know what? There's a percentage in terms of global of the closing costs, and I forget what that is. It's some percentage of the purchase price. But in title insurance, typically it's 4,000 in premium per million
Okay.
dollars of purchase price.
Okay, that's a good example.
The typical people aren't really going to get ripped off in terms of the premium. If you compare 15 different title bills from companies, the premium will be the same. It's the other fees where buyers need to really look out. And one of my key jobs is education. You're correct to say that most buyers have no idea. They get to the closing table and the attorney says, make a check for $8,000 out to ABC Title Company. And that's the first they hear of it. Meanwhile, when they went out to buy a new coffee maker, they comparison shopped for 9 days before they bought it. Title insurance, the most important part of the purchase, they just take, not that they shouldn't take the attorney's word, but they should do their own due diligence.
So is it a good assessment to say as a red flag, check on anything that is junk fees other than the premium?
Sure. And reach out to another title company and ask them for a title bill based on this purchase price, this mortgage amount in this town. We actually have technology online that somebody can go in and for any town in New York State, they can put in the purchase price and the mortgage amount, and they will get the charges that would be on our title bill.
Now, title search is something that is a basic fundamental of what you guys do when you are offering this title for someone that is buying a property. The title search creates sometimes or defects when companies have not done a good job on the title search. What have you seen is a very common defect on the title search?
I would say a common one is that the prior mortgage holder did not record a satisfaction. So it shows up as an open mortgage. The
Okay.
problem there is that so many banks went out of business. So often it can be difficult to track down that bank and get them to record a satisfaction. And there are ways around that too. There are companies who will find that for you for, I think, $100. So there's always a workaround, but that's a big defect on Long Island. A big defect are boundary line disagreements where the house next door is infringing on your property. And that's an issue that needs to be resolved, but it needs to be resolved the right way. That's where, so, I say at the closing table, you're going to get a title policy. But what went into that policy? There are different ways around an issue. There are right ways and there are quick and expedient ways. The right way protects the buyer, the expedient way does not. And boundary line agreements are a perfect example where, tell me if I'm talking too long, but you can go with an affidavit to the neighbor and say your fence is infringing on my property by 3 feet. This affidavit says you acknowledge that it's my property. and that's great. So the neighbor signs it, and you're good to close. Now you're good to close because you've overcome that issue. The problem for the buyer is that if that neighbor moves, that affidavit is invalid. So we insist on a boundary line agreement, which is a recorded document. Not everybody does. We've had fights. I can't tell you how many fights we've had with sellers' attorneys, which is the affidavit is fine. And we've even had buyers' attorneys say it's fine. Well, it's not fine. Our job as a title company is to protect the buyer.
Well, I actually experienced myself an issue with boundaries as well, and I actually did what you just suggested to make sure that it's recorded. When I was buying a property, and I realized that the when I got the report, and I realized that the neighbor was basically 2 feet into my property, I had to just do something about it. But interesting.
And what was your seller's attorney agreeable to a boundary line agreement?
Yeah.
Oh, that's great. See, there are really great attorneys out there, and then unfortunately there are really not great attorneys.
Yeah. So let's talk about commercial real estate in New York. I mean, you've been in the area for a long time, and you've seen everything from the '07, '08 crisis to COVID. In When COVID hit, basically the entire New York area changed completely. A lot of people going to the office now. Most people not going to the office. The whole system changed, and a lot of people said the commercial industry is going to collapse. And what has happened in the last 4 years that you've seen? I mean, is it really going to collapse? A lot of people, even my neighbor, was telling me, well, things are not going to be, you're not going to see anything until a few years later because obviously everything is backed. All of these investments and maturities is going to take place years later. So, what have you seen on the real estate market, commercial real estate market in New York City? Is it changing? How is it changing? Is it collapsing? Is it not? What's your opinion?
It's certainly not collapsing, but it is changing. So, just to touch on the collapsing part. So, yes, there's a wall of maturities in the CMBS yes, commercial mortgages are an issue. Banks don't want to necessarily face issues, so they do what's called lend and extend, which basically pushes the issue down the road a little bit. Another another name for that phrase is lend and pretend. They're just kicking the can down the road. There have been a lot of instances of owners giving buildings back, of distressed sales, and those are mostly in the office space. You
Mhm.
spoke of the office space. In New York, you have A, B, and C buildings. The A buildings, like One Vanderbilt. I don't know if you've ever seen that. Right
Yes.
next to the Grand Central Station, gorgeous, fully leased, new construction, buildings with all the amenities aren't really having a problem. B and C buildings, like if you've ever gone down to Wall Street, the old insurance companies, they're old, they're dark, and they have no amenities, and they're having a problem. So, what to do? Their mortgages are probably underwater or definitely underwater. There's one large commercial real estate broker in the city. He says a lot of these buildings are going to be knocked down because they're worth the land. So they'll be knocked down and maybe build something else. I know that office residential conversions have become a popular topic. I think right now there's about, I just read about it yesterday. I think about 50,000 office to residential apartment conversions that are in the works. The issue is, will it work? Some of these buildings are very hard to convert because of the infrastructure. Listen, New York City is New York City. I was here in 2001. When it comes back, retail was in the dumps during COVID. It's coming back, although you do see a lot of vacancies. Another issue in New York City is quality of life for these buildings, whether it's residential or office, you're stepping over people. I know that the Roosevelt Hotel near Grand Central Station, along with hotels all over the city were converted into shelters. And, the law and order has been a little bit under fire. It's changing back to law and order, but it's going to take time. I mean, all those things like somebody going to the office, you don't want to have to walk and worry.
Yeah.
Like banks don't want to lend and extend, you don't want to walk and worry.
So this is a good number. 50,000
Ballpark.
uh, units converting from office into residential condominiums. Very good number, but obviously that's on the works, and that's something that's in the process of being happening. Now, we still have an issue of inventory in New York. Are we, or how is that inventory in Long Island and the state of New York in general? How's that going?
Uh, Not good. And one of the problems is legislative.
Mm,
My son-in-law is a builder of luxury rental housing. They have large developments in New Jersey. Island is in need of that. The issue is the powers that be set up roadblocks, and like New York City just became the city of yes. I don't know if you're familiar with that,
no.
where they're welcoming construction. There was I think it was 421A was a tax abatement that builders needed who were building the big buildings, and that went away. I forget how many years ago, and they just instituted a new tax abatement. I think it's called 485X, but the issue is getting permits, getting approvals, it's hard. And that's the issue. So, one other aspect of legislation in 2019, New York City or New York State instituted a law that was extremely detrimental to the owners of multifamily buildings, where they couldn't raise rents, they couldn't write off renovations, so they weren't doing renovations. And it was the kind of legislation that sounded very tenant friendly, which is kind of the pandering that government does. But at
Yeah.
the end of the day, it was going to be destructive to the tenants because the buildings were going to become dilapidated.
Yeah. Yeah, makes sense. New York City is a unique city
No question.
compared with any other city in the US. It has its own benefits and challenges, but like you said, one of the things about the city is that it always comes back, no matter what.
You know,
And I'm looking forward to that. Now, rates is a topic. You're in the industry, commercial, residential. We all affected by rates, and rates is something that no one can predict. But I'm going to ask you a question. What is your prediction for this year?
I don't, my personal opinion, and the 10-year today is down about 6 basis points. I think it's 445, I believe. That's down from 475. I don't believe that interest rates are going to come down appreciably. I look at the macro, I look at our $37 trillion debt in this country. I look at the fact that, you know, we may be getting tax cuts. The government is inefficient and bloated. And, at some point, having been a bond trader, borrowers demand a return commensurate with the risk. And I remember a few years ago, I forget how many years, so maybe in the 2008 range, where they downgraded the U.S. debt,
Hmm.
AAA. And I just think the volumes of borrowing is going to prohibit interest rates from falling appreciably. My opinion.
Right. Good one. We're going to collect your opinion and all of the people that I have interviewed. They're all giving opinions, and we're going to combine them to see what happens in the next 12 months.
Well, I
That's going to
can't
be
say it
interesting.
on air, but you know what they say about opinions.
Yeah, it's just an opinion, but go ahead.
Well, they're like assholes.
Right.
Everybody's got one.
So true.
Yeah,
So true.
yeah, yeah, yeah.
They all have the right to
Of
make an
course,
opinion.
of course.
um, all right. Obviously, one of the reasons we decided to make this show is because at the end, we want people to learn from the experiences of other people, especially successful people like yourself. And you've been in the downturns, you lost everything, you rebuilt everything. If you go back 40 years from now and you meet with your Michael, and your Michael, it's only 20 something years old, what would you tell your young Michael today if you get to see him when he was in his 20s with all of the experience that you have now?
I got to be 100% honest. Being that I just turned 65, I think about these things. I actually
Yeah.
do. And I do have, as we all do, I do have regrets about things when I was young. One thing I would say is you have to network more. I would tell my old self, you have to be out there. That's where the opportunities come from. You can't, like they say about a business, your business can't be a secret, and you can't be a secret. I mean, I think one big thing would be I would be more out there. I would be more of a schmoozer. I in my young age I was not a schmoozer, and
Mm,
I think that's detrimental. I really do. So, and I also made other mistakes, that stubborn type mistakes, where I try to instill in my kids that it's okay to get help from people. And back then, stubborn, not so much.
good. That's a unique perspective. Thanks for sharing. Last question. I know that you're very passionate. You're a family man, and especially you found a passion in the last few years about helping veterans, which is I really commend for that. And there's a program, Heroes for Heroes. I heard you in one of the podcasts talking about it. By the way, you have your own podcast as well. I heard about the reasoning and everything behind Heroes for Heroes, but I want you to tell uh, the whole story behind it. And
Absolutely.
if you can just share a little bit more about it, please.
Absolutely. I appreciate that. So it's actually Heroes to Heroes.
Or two
And
heroes.
it was founded by a woman. So we work with combat vets who return home suffering moral injury. And moral injury is where you do something, you see something, something happens that is so against everything you hold as a basic human being. It goes against everything. Like, for example, the IDF soldiers who went into October 7th, and the things that they saw are things they can't unsee. And those are things that you cannot, it's very difficult to purge. And that stays inside of you. And suicide is a large issue.
Yeah.
So, Heroes to Heroes works with combat vets, both US and IDF, and basically, our program is based on peer support, because I was actually talking to somebody about this yesterday. I can sit across from a vet and he's not going to open up to me. He's not going to tell me his experiences. But two vets experiencing the same thing, they can discuss, talk, vent. It's a important part of healing. But beyond that, spiritual reawakening and reconnection to faith. Loss of faith is a large contributing factor in a lot of suicide. Somebody who witnessed God knows what, how do they believe in a God, you know? And they lose that faith. And our program helps them to rebuild that faith. And a key part of that are 10-day team journeys to Israel. So they get baptized in the Jordan River. They go to Yad Vashem. I don't know if you're familiar with that. They walk where Christ walked. Basically, and it's a working trip. It's not a vacation. They travel all day, and then they have counseling meetings, group sessions at night. And it's an extremely key aspect to the healing process, because you know, faith, if you walk where Christ walked, if you put your hand on the Wailing Wall, I mean, we've had vets who've said they felt electricity go through their hand,
Right.
but it begins their road to healing. And, we've had over 450 vets come through, and each one is with us in their own process of healing. So it's a fantastic, and The efficacy of our program has been validated by a doctor at the University of South Alabama who's a foremost expert in moral injury in the country. So it's really a fantastic program. I was sitting at a business club in the city. I started speaking to the woman sitting at the table. It was the founder of the charity, and I said, you know what? I got to get involved with that. So I did, and now I'm the board chair.
Nice. Well, congrats. This is a very unique cause, and I hope that somehow we can relate to it, even if we're not veterans. I think that we owe a lot to these people involved. Michael, thank you so much for being with us.
Pleasure.
I never met you before, but you are a gentleman, and
Too.
you have an amazing career. I do want to commend for everything that you've done, and I know that you're a great family man. I heard great things about you by reading about you, and thank you for your time.
You know what? I really appreciate coming on. You do a great job. You bring it out of me, man.
Michael, let's see if we can connect later. Amazing experience today, just meeting you and hear more about you and learn. Thank you so much. And
Thank you.
guys, this was the People's Matter show. Thanks for joining today. Thanks.